look at the current environment, after a very difficult year for fixed income in 2022, the outlook for 2023 is more optimistic. The average dollar price in both the asset classes has dropped to below 90 and at levels we haven't seen for quite some time. What does this mean for the American Income Fund? With over 80% of the assets, 50% US investment grade and 30% US high yield, trading at significant discounts to par, we have the ability to provide total return within the portfolio, and in doing so without taking excessive risk. If we look at the yield levels for both of these asset classes, they're back to levels we haven't seen in quite some time. Based on those yields, we're excited about the opportunity to be able to add yield to the portfolio without dipping down the credit quality spectrum. Remember, the average rating of the American Income Fund is investment grade, and we focus on the higher of the credit spectrum within the high yield universe, the double B, single B credit category. The return profile for the asset class typically, after a negative year, has positive returns, and in many cases has multiple years of positive returns. In addition to that backdrop, we also have a very strong fundamental backdrop. You have credit balances or cash balances at all-time highs, you have leverage back to below levels where it was prior to COVID, and you have interest coverage levels at all-time highs as well. This is a factor of two different functions. You have one, the increase in earnings since the COVID pandemic and the low in the first quarter of 2021. And you also have new issuance that came throughout 2020, 2021, and in 2022, where company management teams have been able to refinance and push out their balances, their debt balances, so that there's no looming maturity wall. One of the other major aspects of why we're positive on the asset class is the fact that issuance has not subsided throughout 2022, despite it being a very difficult year. This has meant that corporate management teams in the investment grade universe have continued to access the capital markets. With the backup in interest rates, if you look at where we are today with a yield of 5.75%, that's relative 2.4% to start the year. We're able to buy new bonds, add them to the portfolio, over 300 basis points increased in yield and interest. So we continue to be very positive on the asset class.